the African e-commerce giant Jumia jumps with joy, as it keeps capturing customers and investors. Jump along and discover what's up with its growing potential in relation to its market opportunity and logistics capabilities, its evolving financial and business situation, as well as possible investor catalysts. Born out of the desire to improve the quality of life in Africa through technology, by offering innovative, convenient, and affordable online services, Jumia's platform built a marketplace and logistics services alongside JumiaPay, which facilitates transactions. Through JumiaPay, other related digital services like airtime recharge, utility bill payments, local deals, tickets, and financial services were made available. In terms of overall reach, Jumia Logistics offers comprehensive fulfillment services, including warehousing, delivery, and tracking, a big reason why it's commonly talked about as the Amazon of Africa. Operating in 9 African countries, Algeria, Egypt, Ghana, Ivory Coast, Kenya, Morocco, Nigeria, Senegal, and Uganda, Jumia reaches approximately 46% of Africa's population, accounting for 70% of the continent's GDP. These countries also represent 71% of Africa's internet users. This wide footprint is supported by favorable macroeconomic factors such as rapid mobile internet growth, a young population, and increasing urbanization, which presents growth opportunities for e-commerce. Indeed, tailwinds pushing Jumia have to do with the continent's internet penetration and smartphone adoption, because by 2030, sub-Saharan Africa is expected to reach 88% smartphone penetration, and Northern Africa, 91%. As Africa's middle class grows and internet access expands, online shopping is gaining popularity, especially due to the lack of organized retail outlets. With mobile money usage also on the rise, the energetic rise of e-commerce efficiency is charged even more. Jumia provides sellers with access to a large customer base, offering data for better product customization, advertising services, and essential tools like content creation facilities, together with web and mobile management interfaces. For customers, Jumia offers a wide product range, competitive prices, product quality, and secure payment options via JumiaPay, with extra emphasis on customer protection through seller standards and reliable delivery services. Jumia's business model is efficient and scalable, with an asset-light logistics approach and proprietary technology infrastructure. The company's strategy focuses on balancing growth with platform monetization and cost efficiency. To drive growth in existing markets, Jumia plans to improve product selection, increase customer adoption through education and marketing, and enhance user experience. They also continue to diversify revenue streams and improve cost efficiencies across various operational areas. Their marketing strategy targets both sellers and customers through various channels like social media influencers, YouTube, radio, billboards, and on-the-ground activation. For sellers, Jumia uses a seller score system, an operational performance tool, and a commercial planning tool to manage promotions. For customers, the platform focuses on search engine marketing, paid social media, influencer collaborations, and CRM tools powered by AI. Jumia also invests in offline marketing and customer support through multilingual omni-channel centers focusing on a seamless customer experience. Seller support is locally deployed, providing assistance in operations, inventory, and pricing, with an online training platform called Vendor Center. The company's infrastructure leverages cloud computing, a private hosting provider, and their proprietary JumiaPay service, with improvements supported by research in AI, machine learning, enhanced infrastructure, and cost efficiency. Absolutely crucial as Jumia competes with traditional retailers and online platforms like Amazon, Noon, Takealot, Konga, among many others. In the payments space, they face competition from fintech firms like OPay and PalmPay in Nigeria. Key challenges include varying laws and regulations across their operating countries, particularly in terms of the risk of political instability affecting operations and effects on JumiaPay, which may be rolled back or phased out. More about this service later. Despite these challenges, Jumia is poised to capitalize on Africa's projected growth in e-commerce with opportunities to expand across a diverse and dynamic continent. However, understanding local complexities remains crucial for success. Naturally, the immense e-commerce opportunity overshadows doubts and obstacles to such a degree that Hepsiburada, a leading Turkish e-commerce platform, entered into a commercial partnership with Jumia to expand product access for North African consumers. Under the agreement, Hepsiburada will list its private label products, part of its retail assortment, and selected Turkish brands on Jumia's platform, opening up a wider variety of high-quality Turkish products to consumers in key African markets. Since the partnership facilitates cross-border trade for seamless access to Turkish products for consumers in the region, there's potential to spread to other parts of Africa in the future. To further financial reach, Jumia began working with Premium International for Financial Services, known as Premium Card, to enhance e-commerce growth in Egypt. Enabling Egyptian customers to get diverse payment solutions and flexible installment plans aimed at improving the online shopping experience and increasing e-commerce adoption. Through this partnership, Premium Card holders gain access to exclusive discounts and special offers on a wide range of products available on Jumia, as well as deals with major local and international brands. Customers can also choose flexible installment payment options with low interest rates, providing them with greater financial flexibility when purchasing across all product categories. Similarly, advertising ability has been advancing with the help of Miracle to implement Miracle Ads, a retail media solution designed to optimize marketplace advertising, particularly the advertising capabilities for sellers in Ghana, Nigeria, Kenya, and Egypt. Using AI-powered sponsored product ads and automated campaign management tools, helping sellers improve performance and customer engagement on Jumia's platform. Miracle Ads platform's tools serves both large brands and individual sellers, allowing each to unlock new revenue streams for Jumia while supporting its growth in the retail media sector, which is projected to reach $204 billion by 2027. Jumia's CEO, Francis Dufay, explained that advertising is a key growth lever for the company, especially with speed and scale, since Jumia integrated Miracle Ads in a matter of 2 months. Miracle's retail media technology, combined with Jumia's extensive market reach across Africa, positions both companies to capitalize on the growing e-commerce advertising market. Jumia currently connects around 70,000 sellers with its customer base, and the adoption of Miracle Ads is contributing to improved monetization and profitability. In regards to transportation, Jumia is constantly collaborating for better solutions. When it comes to electric bikes, what better place to go than Kampala, Uganda, one of the places with the most lightning in the world? Seriously, check it out. It's not only the Ugandan capital, but also one of the lightning strike capitals of the world. In any case, Jumia is electrifying with Spiro to provide a fleet of electric bikes for delivery operations in Kampala as part of its environmental strategy to reduce carbon emissions from logistics. With the objective of replacing a portion of Jumia's fuel-based delivery vehicles with electric bikes, with nearly half of the fleet in Kampala expected to consist of e-bikes. These e-bikes are equipped with motors and batteries capable of completing a full day's deliveries after a 4-hour charging period. To enhance appeal, Spiro offers Jumia's logistics partners reduced rates to promote the adoption of these electric vehicles, contributing to lower fuel and maintenance costs for delivery riders, with the potential for customers to benefit from reduced delivery fees as Jumia passes on operational savings. Savings which will be vital as Jumia aims for profitability by Q4 2026, with full-year profitability targeted for 2027. On the way to reaching those goals, the road hasn't always been smooth. Revenue had previously fluctuated heavily, with a tendency to decline regularly. While the company is still emerging, efforts stay fixated on reducing losses, with the aid of renegotiated third-party logistics contracts and cutting fulfillment expenses per order by almost 15%. Emphasis is also directed at physical goods orders growth of up to 25%, driven by strong demand and better execution, while expanding its geographic reach, especially for orders coming from underserved regions. Increase in demand in gross merchandise volume, GMV, is a priority, particularly with physical goods orders growth, along with increase in quarterly active customers to maintain growing demand and platform engagement. Yet growth initiatives and cost-cutting efforts face persistent friction because of struggling gross profit margin, sometimes falling down to 12%. Due to macroeconomic challenges and reduced corporate sales, especially in Egypt, which impacts first-party sales, particularly corporate bulk purchases. This then tends to stifle GMV, because high-value orders decrease with lower corporate sales, though the number of regular orders remains relatively stable. In cost management, Jumia has made progress reducing its marketing spend, while loss reduction efforts aim for improved top-line revenue and operational efficiencies in the form of better fulfillment centers and cost-saving strategies. For example, Jumia consolidated several warehouses to improve logistics efficiency at the cost of short-term disruptions. Logistically, the earlier launch of a new 6,000 square meter warehouse in Tema, Ghana, enhances e-commerce growth as part of its ongoing strategy to optimize operations across Africa. It also builds on previous expansions in Nigeria, Morocco, Egypt, and Côte d'Ivoire. Recent warehouse expansions, like the one in Ghana, boost Jumia's storage capacity, improving its ability to manage a growing product range and meet rising customer expectations. By optimizing supply chain operations, the facility aims to reduce delivery times, expand product availability, and offer faster, more reliable service to customers. The location in Tema is strategically positioned to improve access to major transportation routes, making nationwide distribution more efficient. Over the past year, moves like increased warehouse space and logistical efficiency are moving Jumia ahead as their stronger-than-expected Q2 2025 results showed. Revenue finally rose meaningfully for the quarter by 25% year-over-year to $45.6 million, surpassing analysts' estimates of $43 million. The adjusted EBITDA loss narrowed to $13.6 million from $16.3 million in Q2 2024, while the loss before income tax improved to $16.3 million from $22.5 million. Key metrics showed accelerating growth, particularly in physical goods. Orders grew 18% year-over-year, and GMV increased by 10%. Thanks to the pivot from low-margin digital services to high-margin physical goods paying off, with first-party sales growing 47% to $23.6 million, driven by strong performances from global brands like Adidas and Starlink, prompting Jumia to stretch its full-year 2025 guidance, increasing its physical goods order growth forecast from at least 25% to upwards of 30%, and GMV growth of at least 15% to upwards of 20%. The projected full-year loss before income tax was narrowed to between $45 million and $50 million, signaling improved profitability prospects, leading to the reaffirmation of the long-term goal of reaching pre-tax break-even by Q4 2026 and full-year profitability by 2027. Since taking over as CEO in late 2022, Francis Dufay has directed focus on leaner cost structures, fewer markets, and efficient logistics. As a result, the company started exiting the non-core markets of South Africa and Tunisia, driven by market dynamics in South Africa and the less favorable conditions in Tunisia. Business shifts have also seen a wind-down of food delivery and payment services. So far, these shifts appear to be paying off as the company reports stable GMV growth in core regions like Nigeria and Kenya, with Egypt showing signs of recovery. Despite these positive results, Jumia still faces challenges, especially given Africa's economic volatility, including significant currency depreciation in key markets like Nigeria and Egypt. However, Jumia has adapted by holding most of its cash in US dollars to shield against currency fluctuations. Positive sentiment has also suppressed pessimism about instability on the continent, thanks to speculation about Axian Group's increasing stake in Jumia, leading to rumors of a potential acquisition. While Dufay hasn't commented directly on the rumors, he confirmed that discussions with Axian are ongoing, particularly around potential synergies in markets like Senegal. According to Bloomberg, Mauritius-based Axian Telecom raised $600 million to refinance its debt and potentially fund an acquisition of Jumia. Axian has been increasing its stake in Jumia, holding 8% of the company's shares as of May 2024. The deal, if successful, could help both companies expand across the African continent, leveraging their complementary strengths. A takeover could also result in Jumia being delisted from the New York Stock Exchange, where it has been trading since its 2019 IPO. While discussions are ongoing, no final agreement has been reached, and both companies keep declining to comment on the matter. The potential deal aligns with Accion's broader strategy to expand its footprint across Africa, with the aid of Jumia's established presence. However, such a takeover would still likely face major challenges related to logistics and payment infrastructure. Regardless, the growing digital economy in Africa keeps presenting a fertile ground for expansion. In addition to Accion's boost, Google's announcement of significant investments in Africa's digital infrastructure will likely result in benefits for Jumia. Google exceeded its 2021 pledge of $1 billion for African internet connectivity, ahead of schedule, and plans to establish 4 strategic subsea cable connectivity hubs across the continent. This move is expected to create new digital corridors within Africa and enhance connectivity between the continent and the rest of the world. Google's investments have already enabled 100 million Africans to access the internet for the first time, and the Equiano subsea cable is projected to boost real GDP in Nigeria by $11.1 billion, $5.8 billion in South Africa, and approximately $290 million for Namibia. On top of that, Google plans to provide free 1-year subscriptions to its Gemini AI Pro plan for college students in 8 African countries, aiming to train 3 million more students, young people, and teachers by 2030, building on the 7 million already trained. As Africa's largest e-commerce platform, Jumia stands to benefit from improved internet connectivity and a digitally skilled population across its markets. The increase in digital access and skills is expected to support Jumia's growth, especially as the region becomes more integrated into the global digital economy. After years of losses, Jumia is emerging with this indirect help from Google and more direct backing from Axion, signaling a new era towards profitability, driven by a combination of operational improvements, cost discipline, and focus on core, high-growth markets. For more on Jumia and other companies, follow Ascencore. Thanks for watching and have a nice day.